What is up, people? Good morning here. It is Monday. What is it? Monday, December 30th, as we're getting ready for the final week of the year with the markets closed on Wednesday, January 1st. I'm going to be trading Monday, maybe Thursday, Friday, but that's going to be it for me. This, I guess, like around New Year's, right? I'm not going to be trading tomorrow, nor will I be trading the first. Well, the first, the market's going to be closed, so it doesn't really matter too much. But we're starting off Monday, the last Monday of the year. The second last day of the year on a pretty bearish note right now. We're taking a pretty big beat down here in the pre-market. We're printing lower highs as things are turning around a little, and everyone was anticipating, oh, okay, maybe this could be the bottom. That's going to be the major pullback. Prices are going to start turning back around, but I'll discuss kind of what my expectations are and how I see these things kind of settling down. We did have former President Carter passed away on Sunday, I believe it was. So typically, I think there's usually a break on Wall Street when something of such nature happens. Now I don't know how this is going to pan out this week. Nothing's been said, but the markets are already going to be a slower week, or I should say a not full week. Right? It's going to be final week. Only four trading days are expected. The daily volume today, on the other hand, is 180,000 contracts going into the morning session, which is actually pretty heavy. On the S&P, we're down a decent bit right now, 1.3% on the SPOOs since the Sunday reopen, and we'll go through some of that plan that I was looking at on Sunday, and it looked pretty damaging from Friday's close and the movement that we had on Friday for the bull side. So last week, mega cap strength helped hold out the broader stock market indexes. Rumble roared after the Tether investment, and we saw that. The overall market to start last week did hold out fairly well, right, until we saw Friday specifically, a decent turning point. On Thursday, stocks had a slight little holiday hangover, it seems, with small caps primarily seeing trading activity as most institutional investors take off for the year. Apple approached a $4 trillion market cap following analyst optimism, and the K-shaped economy recovery continued as we rolled out a perfect holiday watch party movie. So we saw that it seemed overall the market was sustaining into the Santa rally, but naturally Santa rallies do come with some kind of pullback. And I'm not saying like, oh, it's over, we start selling rallies religiously, but right now you can't argue that there is still weakness in the market, especially after the Fed move. Things did take a little more bearish hold, and we've been failing to kind of hold out better auctions to the upside swing. So this week, there's not necessarily too much that I would say we're looking at or looking for. I think that overall, there's not like crazy news that's expected this week other than the market's going to be closed. We see that Yellen talked about the U.S. debt limit will be reached by mid-January. The FOMC is getting 3 hawks and 1 dove. Remember that they switch up the voters. So in 2025, 3 more hawks and 1 dove are going to enter the FOMC in the rotation. We saw that South Korea to inspect. In South Korea, unfortunately, and there were a few other places, I think one in Canada and one somewhere else. I can't remember the other one, but multiple plane crashes this weekend, which was pretty bad. Very horrific one in South Korea. It looked disastrous. Out of the 181 people that were on board, only 2 survived, crew members. From what I've read, again, don't fully quote me on this, but tragic stuff going on. And South Korea is inspecting the Boeing aircraft after this deadly crash. Boeing is down pretty significantly. I think that Boeing still has some downside to go before looking at this as a long opportunity, but they've got, like, these guys are just, like, burying themselves in troubles. Google also asked its employees, Sundar Pichai talked to his employees about a challenging 2025. Let me take a look. Let me see what that full information was that came out of that. Google had recently done pretty well overall. We had a nice spike here over the last few weeks in Google to wrap up the year after it had been lagging pretty aggressively. But let me see, where was it? Yeah, so Sundar Pichai tells employees that the stakes are high in 2025. He held, and Google executives held a 2025 strategy meeting, setting the stage for the year of increased competition, regulatory hurdles, and advancement in AI. Pichai said that Google will introduce a number of AI features during the first half of 2025, but also warned that it would be a challenging year because we're facing scrutiny across the world. Remember, they're always getting hounded by the DOJ and whatnot. In terms of some of the other news, I don't really see too much. But, yeah, anyways, so we had a pretty strong downside move here on the overnight session, and it's not like, oh, okay, everything is good to go in these markets, right? S&P and NASDAQ, we start buying this thing. The prior week, or I guess like last week, there was a cleanup of this auction that was given to us, a very poor weak auction that was given to us after the Fed. And realistically, it made sense to go and clean it up, but once it got cleaned up, the expectation was to see if the bear side wanted to continue. So now we're below last week's main balance or lower balance. We're below within a larger balance to the downside. And realistically, I am looking at 59.25, 59.30 area as a potential turning point and impossible higher low on a bigger picture, but you look at this market, we're accepting into auctions lower. It's not the prettiest sight to look at to be like, oh, frickin' start buying this shit. Like, everyone's going to be very inclined, it seems, to try to find a turning point in this market. But the way that I see it right now is that we're in a bearish structure. There is the potential for that long to start pushing into the new year. One of the main reasons, well, I guess maybe not a main reason, but one of the solid reasons that I've got is that put prices on the SPX, put prices in general are very overweight right now in comparison to the call price. I think calls are very cheap, and it makes sense to see if we can maybe ping some along. But I think that this flush, I was honestly expecting it tomorrow, but I think this flush is still in bearish momentum until S&P starts moving above that 59.85, 59.90. I think it's going to be a hard task to be like, oh, I got to buy every dip, I got to buy turning points. Remember, we talked about this last Friday when we did our stream. To wrap up the week, we had a pretty strong downside move in NASDAQ. Everything, realistically. So, NASDAQ falling, and I was talking about this, like, there's no real point right now in looking to try to capture this long just because you're not on the short. You're probably better off trying to short smaller pullbacks until we start changing structure than it is to try to find where this bottom is. And today or tomorrow can be such situation. So, we're in bearish structure right now. We're in bearish balances to the downside, and I think it's going to be it'd be pretty risky to try to ping this bottom unless we start holding bullish momentum through balances, meaning that we start ripping back above 59.85, 59.90. That could open up on the S&P a little more of that upside. We clean the overnight auctions. We move into last week's balance. There are a lot of things that line up with that 59.90-ish area. If we can actually catch a bit above it, that would really help this market start opening up to the long side. Otherwise, you're in a troubling spot right now. Yeah, okay, maybe you can wait for 59.25.30 there and look for that reversal and look for that fade. But just be very careful. You need to see something very imbalanced that allows price to turn at that point. So, caution for the long side today. I think that from a swing perspective, it might start making a little more sense going into January and whatnot to look for some of those longs from a swing perspective because calls are pretty freaking cheap. I bet puts are going to be pretty expensive, and buying expensive puts is like shorting in a hole. So just be cautious with that. Now, hope everyone has a fantastic new year, has a fantastic week ahead, and we'll see you around, right? I'll be trading Thursday and Friday again. I'm going to trade today, but we're going to open up our live trading room. I'll see you all in there. Thank you for joining the stream. And if I don't see you guys, if you're not in the free Discord at community.tradebrokacademy.com, I wish everyone has an amazing New Year's. Stay safe. Had an amazing 2024. And most importantly, are getting ready for an even better 2025. So thank you all. It's been a great year.